Hello guys, this is ES Manar. In the last video, I was speaking about the quantity aspect of the company that the investors should look upon when they decide to invest in the stock market. In that video also, I have shown different kinds of data that we have to watch, that the investor have to look. And also it is a very important video, and if you have not watched that video, go and watch it. I will give you the link on top, okay? However, in this video, I'll be talking only about the economic analysis or the macroeconomics of the country, where I will share with you, okay, some of those important points that we should keep in mind, that we should look before we invest in the stock market. However, in general, I would say that the economic of the country, especially our country India, okay, will do well in the long term. There is no issue about it. There is no doubt about it. However, as a beginner, especially those are new investors, it's very important that we have to look upon this. And the economy of the country is mostly reflect on these points which I am going to share with you here. Number one is the political stability. Why this point is here? Yes, it is a very important point again. Why? Because any political party who wins the majority in the general election, they can easily pass any bill, they can change any kind of amendment, or they can bring any bills, they can easily pass any laws in the parliament. If they want to bring about the economic reform, they can easily do it. And this definitely will bring about the economic changes or economic development in the country. And this will reflect in the stock market and also in the GDP of the country. And now if you look here in the screen, okay, in 2014, okay, when the BJP came into power in 2014, Sensex, if I'm not mistaken, okay, wait, still on the list, okay, the Sensex is giving a return more than 200. If a Sensex cross more than 200% giving a return, the individual stocks such as maybe like Bharat Electronic, then maybe like other private sector, like in Hindustan Unilever, okay, this is a blue chip stock again, okay. And remember, this video is only for educational purpose only. And if the Nifty and if the Sensex, if all the index are crossing more than 10%, maybe this one is more than 200, definitely the individual stock will give more than 3000 plus, maybe sometime maybe more than 500. It depends from one stock to the other. It's not always the same. Maybe the energy stock will give you 200, the defense will give more than 400. It depends on from one stock to the other. However, the main objective which I am showing you here, this one is that the economy of the country is mostly reflect on the performance in the stock market of the country, which is one of the main point which I am explaining to you. And the second which I am going to share with you, okay, please comment here what is that main point, okay. That is the GDP of the country. Yes, the gross domestic product of the country also is a very important indicator that we look upon either the country is doing well or not in terms of the economy as a whole. Okay, now if we look back to different countries, okay, they have performing in different way. However, in this one, okay, I'll show you some of the data about the GDP of the country, about their growth from since 2014, since this BJP government came into power in 2014. Now if you look here in 2014 here on the screen, okay, the GDP of the country, okay, here is, okay, 1 minute, GDP, it was only 2039.13 billions. Now it rose to $2,103.59 billion, 8% plus. Now let us not look into detail all this thing, but we will look slowly and gradually till 2024, okay, 2023-24, which was recently given by this data, given by this economic survey, okay. Now if you look in 2023, it was in GDP growth is only 7.2%. However, in 2024, it grew more than to 8%, which is roughly 3,940.00 billion, okay, in dollar. This shows that the economy of the country is growing well. It as I have told you, okay, in the last point, not last point, in the first point, that the performance of the economy is mostly reflected on the performance in the stock market and the GDP of the country. And the third point which I'm going to discuss with you is about the interest rate raised by the RBI. Yes, interest rate is a very important. It can it can make the economy of the country to grow by leaps and bounds, and also it can also make the economy of a country to fall down. Okay, now let us for you to understand more about this, okay, let me take with one example. Now if the RBI increase the interest rate to 8%, the other companies such as maybe like Wipro, then Hindustan Unilever Limited, then Infosys, then and so on and so forth, all those companies which is available in India, they will not go, okay, most of them, they will not go and borrow money from the bank. Why? Because they have to pay a lot of interest rate to the bank. Now in the process, if there is no money, okay, these companies, okay, they will not be able to expand their business. When they cannot expand their business, now their earning also start coming declining. Okay, again the job creation also starting declining. Now in the process, again, okay, when there is lot of unemployment, now the demand for food, the demand for different kind of products, such as maybe like let us give one example, okay, like beauty products, then clothes, the demand is very low, the spending of the consumer is very less. Now this behavior of the consumer will definitely affect the stock market as a whole, because as soon as the company release their quarters result, okay, if they see that there is rapidly that this company is not selling so much products, okay, they are getting less revenue, getting even the profit margin also very less, then it keep on continuing for the next 2-3 years, definitely the stock market of the country is starting declining. That's why the interest rate of the country is a very important, which is reflect in the stock market itself, in the economy of the country. And besides that also, it will also reflect on the GDP of the country. So guys, I hope you have understood about this economic analysis, which I have taken only 3 points, but they are very important, because any one of those, okay, make mistake in this. For example, let us say if there is a mistake in the interest rate, okay, maybe very high, maybe very low, so it can impact the economy of the country. And if there is for example, like in the political stability, okay, if there is the government is not stable, maybe there is a coalition government, then now and then it start falling down, or under party come into power again, the stock market will keep on okay, will keep falling down. But I would say that the political stability is not that very important. However, it would definitely make the stock market skyrocket if the political party have a majority of shares or votes in the parliament. So that's why it is very important, even though sometimes if you see there is a coalition of government in the central, okay, the stock market is not performing so much. Because why? Because there is a high chance that the government will collapse. But in most cases, in overall, maybe in the long term, the economy of the country, the stock market is doing well, no doubt about it. However, we have to be patient. So guys, I hope this video you have gained a lot from this. So thank you so much, and see you in the next video.